Some trading days and trading weeks are more important than others. Today's a big day. This is a big week. Broke a 4-day losing streak on Friday. Back up near the highs of the move. We got inflation data. We're going to talk about the big week coming up here in a few minutes. We're going to talk about Berkshire Hathaway. Tracey Ryniec joining us at 8:35, and I am going to start the show out with Dennis with a personal apology. Mitch, let's get things going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're starting out in the green, up 6 3/4 handles at 41.57. Nice level up top. Friday's high and Wednesday's high right there together. We'll see if we can poke through there. The buck is down almost 13 cents at 100.87. Bonds are down 20-30 seconds at 130 and 11-30 seconds. Another good day for crude, up $1.98 at 73.32. Gold remaining in the 2,000 handle, up 550 at 20-30-20. Silver going the opposite direction. That's down a nickel at 25.87. And withdrawal issues at Binance. We're down 17.55. Clinging to 28K in the Bitcoin futures. Let's bring on Triple D. And Triple D, I should have, is not a personal apology to you, but I'm very upset with myself over the Kentucky Derby.
Yeah, why?
Yeah, come on, Joel. I thought you had, those eyes out there. Tell us what happened.
Well, do the morning. Well, we did do a swim on Saturday. We did a 3-mile walk. We're at breakfast, and boom, pops up on my phone. My horse is scratched. It's out of the race. It's out of the race.
Tough start.
Yeah.
Tough start.
Instead of, if I was at the track, like when I was a little kid, what I would do is I'd grab the program and I'd put a big X through the horse, right? Because he's not racing. And I would say, okay, that horse is out. Where should I go? I should have totally thrown out all my analysis for, that's a problem. You write an article on Friday and the horse scratches on Saturday.
Yeah.
Because if I would have had a real program, that's what I'm going to do now. I'm not going to go through the websites. I'm going to print out a program and I'm going to look at it. You know that horse Mage that ended up winning?
Yeah.
Guess who he lost to in his last race in the Florida Derby?
Your horse.
My horse. And he made a great move, and then Forte caught him. The horse goes off at like 10, 12 to 1. Instead, I stick with this, what I wrote in my article. So I personally apologize to the chat. You guys are not going to get me to do that very often. Should have had the program. Should have been looking at it. The second best horse in the race, Mitch, Angel of Empire, that came in third.
The second year in a row, man, I picked the third place guy. So
you got to bet the show. Then you got to bet the show.
Got to bet the show.
But anyways, we'll see if Forte comes back. But man, that's it. I got to get a program and I got to look at it and I got to do my analysis and forget what I wrote. I mean, these scratches make it tough. But anyways, Dennis,
did we find out why he got scratched?
Bruised foot, right, or something like that.
Yeah. Wink, wink. No, I don't know. He stumbled on Thursday. He looked a little gimpy. He galloped Saturday morning, and the tracks are being very conservative. And in addition to 5 horses dying at the track, 2 were euthanized during the races after their races on Saturday. And, they just didn't want to take a chance. And boy, if you're the owner, I mean, you talk about $1 million just going, or potentially $1 million just going poof like that. But it sets the stage for the Preakness if Forte can come back and he'll be fresh against Mage in the Preakness. But you guys aren't here to listen to horse racing.
I know. We can talk about one stallion that never gives up and keeps going. Of course, none other than Warren Buffett, of course.
He's the stallion. See, it was all a segue. It was all one big segue into the Warren Buffett show on the weekend. The
stallion that is Warren Buffett, right?
Yep.
Why we pay Mitch the big bucks. He gets that
Let's go,
segue
team.
in there.
Let's talk about it. First thing we'll talk about, he did talk about the reserve currency. He says, I see no option for any currency to be the reserve currency. So let's just get that one out of the way. I don't think that's really important. Let's get to the good stuff, right? Of course, he did talk about Occidental Petroleum. I thought that was really big news coming out of the meeting. Of course, Berkshire Hathaway's meeting over the weekend. This one took place. If you guys haven't seen it, it's like over 7 hours. You guys have some time. Check it out.
They talk, man.
Yeah, man. I don't know if I can stay on stage for 7 hours. They're going to cut that short. But Berkshire Hathaway wouldn't take over Occidental Petroleum. Stated was the quote that there's speculation about us buying control. We're not going to buy control. We wouldn't know what to do with it, is what Warren Buffett said. Yeah. And so we'll go with that one first. Let's talk about this first, and then we're going to take it slowly down the line of the highlights.
Yeah, lots of implications from everything that Buffett said. And commentary, and obviously this was a question. Are you going to buy the rest of Occidental Petroleum because you already own 23%? I've speculated on the show that he might buy the whole company. So he squashed that speculation here. And it kind of makes sense. Like when you think about it, what he said was they wouldn't know what to do with it, meaning they don't want to buy control and run this company. They want it to just continue to run as it is. He did say they are authorized to go up to 50%. So basically they can go up to 50% without even talking to shareholders here. So they're 23 right now. So I think the media is interpreting, he's not buying any more Oxy. I didn't interpret it that way. I'm interpreting that he's not buying the whole company, which is why the stock is down here today. But I still think you got this Buffett buy zone, 58. 59. It bounced off of there a couple days ago. As it pulls back into that buy zone, that 58 to 59 area, I will continue to buy it as well. It's just trading it because I do think now, if you see a disclosure come that he bought more Oxy, the market's be like, whoa, but he said he wasn't going to buy anymore because this market is stupid. Now, I'm pretty sure he's going to buy more stock. He kind of, hinted that he could buy more stock. He just said he's not buying the whole company. So I think the market's interpreting it that, he's not buying the whole company, so I'm not going to take over. And that's correct. So, maybe there was a little bit of premium in there, and that's why the stock's down a little bit. But I still think you got the Buffett buy zone, 58 to 59. I'm still playing it down there.
All right, let's keep going to a next comment here. Let's go to Warren Buffett on Paramount. He said that it's never good when a company cuts dividend dramatically, of course. And we've known that he still has that exposure there. But Paramount definitely going down as of late. Is this a move that he's going to get out of? Of course, not given here, but something that I'd keep a watch on to see if he just starts piecing out of it, right? I mean, it's not looking good for
It's not Buffett style, Mitch.
Yeah.
It's not Buffett style unless the company's like he feels like they're in trouble and he pieces out the airlines. He's not a big Salmon, and he's not a big like taking my losses and moving on. And it's a small position from him. I don't think he's going to sell it. Yeah, it is a small one. I don't think he's going to sell his Paramount. I don't think he's going to say, okay, I'm wrong and I'm out on this. I think he sees it as
watch your offers there, Dennis. We're popping a little bit.
Yeah, a little bit. We're popping up a little bit.
Okay.
So I think this Paramount's interesting, Joel. You are at major support. The one reason I would say is if you want to take a shot is the 15.29, which is the low from April. Sorry, the low from, when was that? I'm just trying to grab the date on that. Sorry, the low from November. The low from November. That's a big level for it. So if you're taking a shot down here and saying 3-day rule, it's down, it could bounce. I mean, if we start to turn this market around and it looks like the market wants to turn around, you got to be looking for dips to buy. I'm not saying I'm coming here and buying Paramount, but there is a level here, 15 and 16. So you're at decent support. This is probably one not for me. There's probably easier plays out there, but I won't argue with you if you're trying it here.
It's just a tough sector, tough industry. Just a lot of competition, more competition coming in. So, don't have, I mean, just technically, set up, you got the bounce off the $16 area. I'm just going to look right instead of left here. And what would be better, for me, if this could like put in a couple lows above that low from Friday, maybe 16 and a quarter, build a little base. The institutions that maybe wanted to buy it at 16 didn't get their fill in there, so they're going to step up. But you got room. I mean, if you could take out yesterday's high, obviously you got room to the top of the gap. But usually when you see stocks that have these big gap downs, it usually takes a while to get back in that gap area. So, and the top of that gap that day was 19. I remember looking at it on Thursday, like, I wonder if 19 is going to hold. Whoosh! They went offered at 19 and never looked back. So we'll see if you could get a couple days, maybe a couple inside days, a little
Yeah,
consolidation there.
yeah.
with
Maybe
Paramount
stop
Glow.
going down. Before you're just trying to call the bottom on it. Maybe give it a chance to just like start rounding or something.
All right, let's keep going. Let's get into some comments that were made in the auto industry, and then we'll also bring the Elon Musk comments with this. First thing that he talked about was that Warren was talking about how the auto industry is just too tough. He even talked about, Henry Ford. He went back into that time when, he accomplished so much, but even 20 years later after the Model T that was, some would say the best design ever made, he said that, they weren't profitable. They were losing money, right? And he said that he wouldn't know who would be the market leader in auto moving forward. And so that's why he's not taking bets in kind of the auto industry. But he did say, of course, he says, I know where Apple's going to be in 5 or 10 years, not the car companies. So that's just going to give you guys the kind of confidence that he has in Apple and not in the auto industry. Let's talk about the Elon Musk comments. He said that Elon Musk has become successful by taking on the impossible job. That's what Buffett and Munger said. Elon Musk overestimates himself, but he's very talented. That's what Munger said there. Warren and I look for the easy job that we can identify. But Buffett affirmed that he and Munger do not want to compete with Elon, and says that, he accomplishes the impossible tasks. So they're not going to compete against him, pretty much. That's what they were saying.
Means he's not going buying Ford GM right away.
Exactly. He's not going after the auto industry. He doesn't care
he's
about
staying
it.
away.
He was in
it's
GM
not
for
a
a
bad
long
call.
time. Yeah. He was in GM for a long time, and then I think that he got out of it. But I mean, just real quick, going back to the Apple comments. I mean, Apple's. I mean, that was one impressive move on Friday. You gotta hand it to. I mean, I know we poo-pooed, or you guys poo-pooed the report a little bit because of declining revenues, but boy, oh boy, that really took off. If you're looking for another target here, 176.15. This Tesla, man, even before this meeting, this thing looked sleepy, didn't it? It had the gap down after earnings. They really tried to bust it, and they couldn't. And then, growth, kind of turned into favor, more in favor today. Now it's trading up 389. I think, look for a gap fill today, or maybe today over the next couple of days, 177.65. But that'd be it. Looks like you got a turn in Tesla there.
You got room to 180 easily here. So if you're 174, I think I'd be holding it for at least the 180 to give you like a 50% retracement of the 200 to 210 to 150. 180 area looks like a good area there. So I think there's room here. I think market is scrambling now. Money managers scrambling. I'm scrambling too. I mean, you see stocks going. I wanted to buy that AMD dip on Friday, and it didn't even last like an hour. So it's just giving you the feel that, hey, the money managers are trying to get exposure here again. They're not buying food stocks and defensive. They're trying to get on the offense here. That's why Tesla's taking off. Today looks like not a huge day for the market, but I would argue when I'm looking under the hood, kind of intended there with Tesla, there's a lot of growthy names really going here today. So, I mean, SPY is down because we know Microsoft and Apple are moving opposite the SPY on some days here and the growthy stuff. But if you look here, banks are having an excellent day here today. Oil is having an excellent day here today. And then you get the growthy names that are having a pretty good day too. And there's a lot of those on the calendar, the Airbnbs and the Twilios and the Upstarts are reporting. So Unity's reporting. There's a lot, Roblox. There's a lot of growthy names reporting this week. And we know there tends to be a positive, move ahead of those reports. Palantir, which I've sold out of, but I was playing for a bit, and I actually did play it over the weekend. I just sold out of it again this morning. It's up 4.5%. It's reporting here tonight. So, I mean, sometimes it's just, money just to be made just from being long these things ahead of the reports. But taking it back to Tesla, the reason I tie all this in is they're all kind of the growthy names that are trading, with higher multiples here. Those stocks are in favor this morning.
Yeah, they were in favor on Friday, right? We'll see if they stay
continuation.
In favor, right? It's continuation
move
from
here,
Friday. Yeah, we'll see from that. And I agree with you on Tesla's closing that gap. That's the one that I called out from May 1st. With Tesla closed the gap right there to 180, and I could see it just closing that and then start using that as resistance. So we'll see if we get up to that level. And I think it's slightly underneath 180, but I can see, 180 in reach. The low there, 177.65. I think that
that fills the gap there. Yep.
All right, we'll see what happens there in that Tesla. Also, there was other comments. Berkshire was asked about, of course, Warren was asked about, well, you own 35% of the portfolio is Apple. Well, he said, no, I own 6% of Apple. That's what I'm focusing on. And he tried to talk about how, a lot of people focus on diversification, but like he says, he just wants to be in the best plays. That's what matters to him. And Munger also said this also. He said, just think about it. In a lot of schools and universities right now, it's being taught that you need to diversify at all costs. Like it's the only way to get out of risk. But he clearly said, no, what I would want to be is in my top 3 plays. And that would probably keep me away from the risk.
Why? How do you go from 35 to 6%? I kind of.
So the portfolio is really, I think, it's 35%. But he started talking about how he was just talking about how what he wants to own of Apple. And that he puts the same amount of money in Apple that he puts in all the railroads. And he kind of compared it to that. But the truth is, it's still 35% of Berkshire's portfolio.
I thought he was over 40 on it.
I think it might be into the 40s.
I thought
that was the pressure. The pressure came to him for non-diversification. He just fought back, saying that he has a certain amount of Apple because he feels confident that that's the best position to be in.
And there's an argument here, and I've been on this show for doing it for 9 years here now with you, Joel, and we've argued to stay diversified. It's the safest way. But if you're trying to get ahead, if you're really trying to I'm young and I'm making a call, diversification, could harm your returns, because you're just, you're in some good stocks, but just in too many different things. So I think it depends on where you are, what stage you're in. Like me and Joel are diversified here now. We're getting older, like Joel's, approaching 80 here.
79.
But I mean, when you're young and you're like Money Mitch here, and you're, just, early in your trading career, early in your career, there's, that's where you can take chances. So I won't argue that, it's okay to take chances and not be diversified when you're young, when you can afford to lose the money. If you're 70 and in retirement, you're all in on stuff, I think it's a different story. I think you should be diversified. But a diversification is good to preserve capital. But if you're really looking like, I need to build capital as quickly as I can, diversification can hurt you too. So there is a consideration, there is an argument there to be heavy in the ones that you really like. If you're young.
I agree with that. And I agree with that, definitely. It's the only way to get to that complete next level, right? If you're trying to keep capital, well, that's a whole nother ball game. All right. I think that's enough for the Berkshire comments. There was another comment into the banks. We'll wrap this up and move it into Pac West here. He did say that commercial real estate could struggle with higher borrowing rates and banks could face more pressure, and noted that deposits were safe. He did talk about his, position in Bank of America. He said, we do remain on one bank holding. We originated that deal, Bank of America. I like Bank of America. I like the management, and I proposed a deal for them, so I will stick with it. He did say that about Bank of America. And then I'll also bring this in with, of course, our Pac West comments today. Pac West on Friday evening did announce a dividend cut to just 1 cent per share from 25 cents per share in the previous quarter. PacWest CEO Paul Taylor reassuring investors, saying that the bank business remains fundamentally sound.
Wait, they can't. I mean, you're talking out both sides of your mouth. You're up for sale one day, and now everything's fine. I mean, I don't
Just
like that.
trying to
I don't
bring the
like that at
confidence
all.
back.
I,
But they're trying to bring the confidence back. The confidence has flown back in here. It looked really ugly 3 days ago, and it has flown back in here to the tune of these, regionals really rallying. I mean, the Friday rally, now we build on it here. PACW hit $2.48. It's now $7.71. Just quietly at a 200% rally here in 2 days. So it is a nice rally. Now, again, if you're coming in here now, I mean, now, the risk reward doesn't look nearly as good. It never looked, I won't play these things at all because I don't know if it's a zero or not. You don't know when they're talking like that. FDIC could come in over the weekend and seize it and you got nothing. So, it's a high risk. The risk doesn't get any higher than a PACW, but the return's pretty high too because the people just got paid 200% for 2 days. So, I mean, it's all risk reward, and the reward was there. I think the reward is starting to look not as good here now, though, because what do you think? It's going back to 2025 here? Maybe a couple years from now if it all materializes, but it'll be a rougher road. Maybe you got to 10. There might be room to 10, but I would be ringing the register today. If I bought this at 2, 3, 4, 5, I'd say thank you very much. You basically got lucky. And because you're trying to catch up falling knife, you basically broke every rule in the book by buying it. But if you got it the last few days, I personally would ring the register. I haven't traded PacWest.
Yeah, I think that's exactly what happened. And actually, I think I talked about that a little bit. Christian joined me on Friday because he has some pony background. But I think it was like the KRE. There was just crazy volume in this thing on Thursday. Like, boom, like just monster volume. And a lot of times those are turning points. It's like, someone's just puking it out. I can't take it anymore. The pain is too much on Thursday. And then I think you just have your intermediate players that like haven't been scarred by this. And you're like, they'll take a shot. Maybe they hedge with something else. I think in all these things, I think they took a shot and boom, you got the good news over the weekend and you're getting a pop. I look at PACW and I wouldn't be comfortable with this thing until it got above that high from last week at like 892. But someone's just peeling out at 8. They don't care. They don't care if it goes to 850 today or 9. They took their risk at 253, 354, 4.5, 5, 5.5. So they're like, oh, $8. Maybe their original target was 7 on the trade. And now they're like, 750, anything over 750 is premium. So just a big move, big volume going off too. If you're buying this thing off the open, you want to see it like for PACW, 8 bid, 810, 820, 830, 840. That, if not, I'd look for a little bit of a fade.
I think you're going to see the opposite. I think you're going to see.
Oh, I agree. I agree with you. I agree.
So
I agree. I'm just saying
too much.
If you're buying
it's a big move really fast. And now you're coming back in that whole area that has memory 9 to 10. I actually think it sets up more from the short side here. But, you got to watch borrow costs. You got to watch a lot of stuff there too. And it's too high risk to short too. I mean, I think just trading this stuff, it's just not my cup of tea. I mean, there are some people who are really good at trading, the movers, the crazy movers. I am not that person. I am not that person that's going in stocks that are moving 80% a day because I cannot control the risk on that.
Yeah, and I don't like doing a lot of one-to-one trades. So if you tell me I can get 50 for 50%, guess what? I'll kick that to the side every time. So let's go. One thing I did see in the chat, and I agree with you. This seems to me like the postman saying here, the Titanic is unsinkable. Well, we found out that wasn't true either, right? So just be careful out there, team. I know that CEOs, Warren Buffett saying that deposits are safe. Are they really safe? I mean, we've heard from the government they are, but that's a whole nother ball game if we keep getting banks.
Yeah, I think we're safe for now. I just think if
For
you had a
now,
dozen of those things
exactly.
failing, it'd be a different story. Right now, we're looking okay again though, because you're seeing rallies in the commons. You're starting to see, some buyers come in. You're seeing some stabilization. You're seeing buyers into everything else.
Yeah,
So
this is the big week. This is the big week. Let's
it's a
just be
big
honest.
week. I think you still got to be thinking about, if you're, rah bull market, you got to be thinking about the themes that are going to drive the next bull market. And it's not banks. It's not the theme. The theme that's going to drive us in the next bull market is the stuff we talk about, AI. It's going to be, a theme there. It's why AMD, and I'm so mad at myself that it gave me 2 shots down there. I talked about buying it twice on this show on the dip, and it gives you the second shot, and it's down there for like 10 minutes on Friday morning, and I come back to it. So I was trading out of my open, and I'm like, I'm going to go buy some AMD. I just didn't have time to get back to it because in long-term portfolio, I got to trade out of all my stuff and, work that because that's moving. And then I go back to my long-term portfolio usually around like 10 a.m. when I slow down on my trading. And I come back to it at 10 a.m. and it's already up $3 from the lows. I was like, are you kidding me? It couldn't stay down there for a little bit there, so to get down there, because I wanted to buy the AMD on Friday on the dip. And I talked about it on the show, and it was in the 80, I think it got down to 83s in the pre-market. And then it opened right at the low and they couldn't stop buying it. But, there's a reason for this. I mean, you still got, Chips talking with one of my friends who's in the chat a lot here over the weekend. There he came, we went for lunch, and he was talking just about the AI movement here. And, how much, like the driver here is. And, NVIDIA and AMD are going to be big players there in everything. Like he was very convinced that AI is going to be in everything. And I agree with him. I think there's going to be AI in a lot of stuff.
I would agree with him, but I think everyone needs to slow their horses, man. This is way too fast, way too much. It's not causing that much revenue right now. This is the metaverse. This is the metaverse. Exactly like the metaverse, I would say.
There's
exactly
always a
like
thing,
it. It's technology 3 years down the line, 4 years down the line. So it's going to be hype for now, and it's going to go away. This is how these hype words work. They come and they go. Let's just be honest.
But here's the deal. If you can buy a company like AMD at a reasonable valuation right now, and you have to determine what is reasonable. Like I'm not going after NVIDIA here at 60 times. It's been running on the buzz. But AMD has not got much run on this buzz, this AI buzz. And let's look, what is the PE? Last time I looked, it was like 29. It's 31. It's not crazy. It's not crazy at 31. It's not out of the realm of possibility that AMD could actually grow into that multiple and be like 20 times earnings in 2-3 years. It's not out of the realm of possibility. I'm not arguing to go buy GFAI or AI or, like other things. But I can see, the point here that a stock like AMD, which is not trading with a crazy valuation anymore, it's not cheap by any means, but it's not 60 times. It's half the price of NVIDIA. That Lisa Su is pretty smart, Joel. That Lisa Su, betting on her isn't a bad idea here. I mean, I just think AMD is going to be a big part of AI. That's why I'm not long it. I wanted to be long it. I had intentions to buy it on Friday under 85. It just didn't give me the chance. It took off too fast. I didn't get to it in time. So I'm like, now I don't know. It's down there twice. I think AMD is going to be back over $100. If this market, and again, there's a lot of.
There you go.
If this market is going to the next bull run, AMD is going to be over $100. It's not going to be just left in the dust. There's going to be that driver, that story driver of AI that's going to take us into that next bull run. And just because, and I agree with you to a certain extent that the metaverse was overhyped. I do think AI is going to be in everything though. Like I'm not saying we're all losing our jobs and it's all over and the bots and we got Skynet coming here. But I do think AI is more legit than the metaverse. I think AI is like, you can see applications everywhere. I'm still skeptical on the metaverse. Like we're all going to go and buy our virtual houses and we're all going to put on our headphones and not go out anymore. We're just going to socialize in the metaverse. That's a stretch. But AI is not a stretch to just helping all businesses, like helping, into everything, into the pharmaceutical industry, into all the industries. It's going to touch into everything. It's why NVIDIA is relentlessly bid. I'm just saying, I think AMD's got a catch-up trade with NVIDIA here eventually because I don't think NVIDIA should be trading with twice the multiple of AMD.
The big thing for me there is not that AI is not real, but that it's going to take years and years. I mean, just think about how long IBM has had Watson. If you guys think that AI would have taken over, then yeah, it would have already taken over. The truth is, it's going to take years and years for true AI to be available. They're just comparing
Mitch, then
it
you
to
should be looking
the
at
hype.
it. You should be looking at it
Yes,
then.
yes,
You know,
yes.
for your, you know, for your
investing,
portfolio.
for investors out there, I would definitely agree. It's a look at, right. It's just you're trading a theme here. That's what you're doing.
But this theme is real. The metaverse is still
different.
a fantasy land. You know, Bitcoin taking over, we're all going to transact in Bitcoin. That's still a fantasy. I mean, I'm a fan of Bitcoin to a certain extent if the regionals are failing. You can see what happens. Yeah, we have the Binance headline down, but I mean, there's definitely the regionals starting to show strength as a sign to get out of Bitcoin now. I mean, and the Binance thing is just coincidental here, obviously, but it's driving Bitcoin down here today. But I mean, there's all these themes we went through, blockchain and this and that. AI is like something that I think is equivalent to like the internet. It isn't like the metaverse is like, you know, expansion of that, but AI is going to be in everything. So I'm just
I think it is in everything. I think it's already here. I think you already have it in a lot
it is, Joel, but it's going
to ways.
It's going to come a lot faster than Mitch thinks. It's going to come a lot faster. Applications are going to continue to come, and it's not going to go away. Here's AMD. It was $164 a year and a half ago, and that was stupid. It shouldn't have got that high. The valuation was ridiculous. But you're halved. You're at $89 on AMD. And I made this argument on Friday too, and I'm making it again. I think you got to be buying AMD on pullbacks here because I do think, and chips for that.
I mean, we're late to the boat though. You got your pullback on the earnings.
Why are we late to the boat?
Because we got a discount off the earnings, right?
I mean, look at the monthly chart.
What are you talking about from the 2 days ago?
I just think it is a chase now up here. Up from the earnings.
I'm saying buying pullbacks. Let's just stop and listen. Like instead of, you know, just like trying to come up with something. What I'm saying is I regret not buying it the last couple of days. I've said this for the last 3 days. I said it when it dropped down on the earnings that I think it's going to be a buy. The next day it popped up on the Azure headline. Then it pulled back and gave you another shot. I missed it both times. I'm saying on pullbacks. I don't buy rips on pullbacks here. I buy stocks, Mitch. I mean, you've been listening to me for a long time.
Yeah.
How often do I buy a stock that runs up 10%? How often do I do that?
I was just saying we got a nice discount off the earnings, right?
Yeah, I know we missed it though.
Yeah.
So that's gone. If I could go back in time, create the time machine, and go back to Thursday, the first thing I would do, go back to Friday, is the first thing I do. I can't do that though. So all I can do is take the information. I'm saying on pullbacks here. I'm not saying today that I got to go and chase AMD. And it might keep going here. I'm saying on pullbacks, you get 87 on this, 88. I don't think you're going to get a shot at 81 or 82 again. Not in the near future, unless the market turns around and just starts crashing. So I think you've got to be, you know, buying dips on AMD. All I'm arguing here is to buy dips on AMD because in your long-term portfolio, because I think we're going to see AMD over $100 sooner than later.
All right. Well, there you guys see it. We'll see if AMD gets above that 100. It's 8:33 here. Let's maybe, do you want to just take a little peek at BioNTech? I know they reported earnings, but it's more traded in, of course, the European markets. Their EPS at $2.05. They're down from 14.24, but they did reiterate COVID-19 vaccines revenue guidance of approximately $5 billion in 2023. So let's take a little peek into BioNTech, and then we'll get to our guests coming up, team. Smash the like
it's
out
a
there.
pop on this, but just such an extended downtrend. I mean, a lot of overhead supply. Pre-market high, 1494. 1490 was your April 28th high, so I'd keep an eye on that if you're looking for more follow through. But I just don't. If money's like Dennis is talking about, if money's moving, if we're breaking out over 4,200, you know, I don't know if this is the stock that I want to be in. I think that this is not going to be your leader. Just overhead supply. That's for BNTX, and then
hate this stock. Absolutely. Let's just call it out. I absolutely hate this stock. I've been correct the whole way down. Less people getting COVID shots. I don't think there's any reason to own BNTX. My opinion, I would not own BNTX. I think it is a lot lower 1 year from now.
And that's how you feel. I agree on that one. I don't think it's where, we talk about the rotation, and I mean, until you get another, major crisis or something, I don't see the money rotating into this one. And you want to do eat less chicken real quick
Oh
and get that
gosh,
out of the way. What
let's
is
do it.
going on? Is no one eating chicken out there anymore? What's going on there?
All right. Well, Tyson, Q2 adjusted EPS at a loss of 4 cents, misses 80-cent estimate. Sales of 13.3 billion, misses the 13.62 billion estimate. They lowered their fiscal revenue outlook to 53. It was at 53 to 54. The prior was 55 to 57. Now they brought it down to 53 to 54. So a couple billion off their revenue guidance for the fiscal year 23.
It's a disaster. I mean, all we talked about is chicken, and you look at this here. This is a disaster. They were expecting to make money, and they lost money, or they didn't make anything. I mean, this is just an epic disaster, and nobody saw it coming.
Yeah.
So I'm staying away. I'm staying away.
COVID
I have to look into this more, but I have no idea how the report could be that much of a disaster. This is an epic disaster.
And if you drive by a Chick-fil-A, I mean, you would not see this as actually possible. But I'll just give you the COVID low here. Your May low, 54.28. If you're looking for a level, on the downside here. All right, 8:36. Let's go to our guest, Mitch.
All right, let's go ahead. Let's get to our guest time today.
Hello, Tracey Ryniec from Zacks Research. Tracey, how you doing today?
I'm good. It's good Monday morning.
It is a good Monday. So are you as surprised at Q1 earnings as I am?
A little bit, yeah. It's much better than what everybody was expecting. So, yeah.
And the consumer, I mean, they're out there. They're still spending money. They talked to us about some of these consumer names, how they've been doing, and then, I mean, could this carry into Q2, take the S&P over 4,200?
Maybe. Because some of them are quite big names. We had excellent report out of McDonald's. They were already doing excellently last year for first quarter. So they had tough comps to try to overcome, and they managed to do it. So people are still finding value in McDonald's. That is usually what happens. It's still fairly affordable to go and eat there, but not so affordable at somewhere like Starbucks. And they had tremendous comps. I couldn't even believe what their comps were. And then we had Chipotle. They've been on the upswing throughout the pandemic. The app really helped, and that's still driving a lot of their sales. But they're also somewhat affordable. And so they're still seeing the consumer turning out there. And that comp was much better than expected. So on the food side, and let me not forget Wingstop. That's another one that very good during the pandemic. And then the price you were just talking about chicken, the chicken wing prices have come down. So that's helped them on the margins, and people are still finding value there. So on food side, the consumer is still spending. We are seeing a little bit of a pullback on like apparel. That area is still kind of dead. Furniture, very dead, because if you're not buying the house, you're unlikely to buy the furniture. And we all bought all the outdoor furniture and all that the last couple of years. We don't need that. I just got a text message over the weekend from Williams and Sonoma telling me that there was a sale on all of their outdoor furniture for up to 60%. And, so you're not going to get 60 on everything, obviously, but I don't remember seeing, real big promotions on outdoor in May. That's a little early for them to be trying to push it out, I feel. So, furniture side still kind of dead, but I would take a look at some of those stocks on the furniture side. They've come way back. They pulled back. They're pretty cheap. They might get a little bit cheaper here still, but I kind of like the furniture area because housing isn't as dead either as what everybody was thinking. Like,
Well,
what
I
is
think
it
that's
like
a
for
big
some of those charts?
surprise. Yeah.
I don't know if you've been looking at those charts. Take a look at like Tri-Point Homes, TPH. They reported just in the last week. It was a great earnings report from Tri-Point. And then Beazer, also a great earnings report. BZH is that one. I think Pulte might be at all-time highs or
That's
something.
unreal.
Pulte.
Yeah.
So,
No recession to be found there, Tracy. Not yet.
No. Sales have come down sharply off of last year, the record they all had last year. So they're down 30 to 40%, but the margins are holding up quite well. For most of them, it's been over 20% margins, which is usually like the bullish time for the home builders is when it's over 20. And it's down off those highs too, but they're making money hand over fist if it's over 20. And some of that has to do with the lumber costs have come way down now. And they're saving, 10,000 or more per home just on lumber costs alone. So that's helping. Yeah, they have had to adjust prices in some markets. And then a lot of them say that they're adjusting product. And that means they're shrinking the size of the home to make it more affordable. But they've all talked about how the buyers are adjusting to these higher mortgage rates. Now, the home builders are mostly buying down the mortgage rates as well. So if they're at 6.5 for the 30-year fixed, they're able to buy it down to like 5.75, and it's not real expensive for them to do that. And in the fives seems to be the sweet spot where the buyers are willing to go in. If we see mortgage rates go back up over 7, I think it's going to get a little more dicey for the home builders over the summer if that were to happen. But right now, that's not happening. So they are seeing the buyers come back in there. And that's another sign, we're not in a recession because you're not as apt to buy a new home when you're worried about losing your job and all that. So it's a good sign. Maybe the soft landing could happen.
Well, if they're not worried about the homes, are they still buying those expensive coffees? It seems like the chat wants to hear about Bros, and maybe we could bring Starbucks with it too. What do you think about those, Tracy? Or what does Zacks
I
think
don't really
about
follow Bros because it's so small. I just think, Starbucks is the industry leader. I own Starbucks in my own personal portfolio. I've owned it for like 10 years or something now. It's every time you go in there, you see the generations basically. And they have been able to raise the prices with very little pushback. As we all know, we go in there, we're still buying it, right? They have improved on their food items. So I do like that. Starbucks is not a cheap stock here, though. It is fairly expensive on a PE basis. So, it has pulled back off those highs off of that earnings report, but and it's got the new CEO. But I still am a fan of going with the leaders.
And,
Are you?
and
What
there's
would
a
make-
consideration
Go
here
ahead.
too. Sorry, Joel. There's a consideration here too, Tracy, that we are seeing when the good stocks come down on their earnings report, we are seeing them coming in and buying them quickly. I mean, AMD was bought very quickly. We were just talking about that one, but Starbucks, is starting to lift here too. I mean, it's like, and you seem to get these pullbacks here. Even GNRC, which was a week and a half ago, now it's turned around here. It seems like when these stocks, these leaders are dipping, there's money managers just out here lurking. And does this just go to, there's maybe just too many people with too much cash, including myself?
Yeah. And to buy the quality. I mean, it dipped on a good earnings report because they did talk about, China being a little slow to recover and some of these things and they have the new CEO. So there was a little bit of doubt in there, but overall, like those comps are they were incredible. Again, double-digit comps in the US. And you don't really see the slowing. Even in Europe, you're not seeing the slowing with Starbucks. And that's historically where they do see it when you're going into like a global recession. So yeah, I feel like that sell-off was overdone, but the shares were at 52-week highs going into that report. And I think that's true of a lot of these big cap names. They're pretty hot.
One more and then I'm ready to Joel. Do you cover Crocs?
I don't, but we've talked about it on the show in the past.
Just because I'm looking and here's one that was a leader. Here's one that actually had a really good earnings report here.
Yeah.
And they hammered it just because the expectations were too high.
They
They've hammered it
were-
all the way
yeah.
down to like $110 where we bottomed in March and we bottomed in February and we bottomed in January. And I'm looking at this 110 level on Crocs and thinking, man, maybe this is a stock and the PE is reasonable here.
Yeah.
And if people keep wanting to buy the shoes with holes in them, what do you think of Crocs?
I do like the shoes. A lot of the shoe stocks have had big runs because shoes do well in recessions. People, if they're looking around, oh, I want to improve my wardrobe, they will go into the shoes. So I think that's why a lot of them have had nice runs. I like Deckers a lot. They've got the Hoka 1-1s. That's a huge brand for them now, in addition to the Uggs. It's been a little bit too hot for me there. I would also take a look at maybe Nike. That they have, they're very hot right now, especially in the US. They've launched their Michael Jordan line for women, and it's already sold out. Like, I saw some influencers talking about it on YouTube, and I went over to Nike to go look at it, and it comes in many colors, but several of the colors were already sold out. So Nike, it's gotten a boost, and they had a decent earnings report, and China again is reopening, so that's going to help them. So yeah, any of these shoes. Boot Barn is another one that I like a lot. I'm not sure. I don't think they've reported yet. But yeah, any of these, like the shoe retailers or the shoe manufacturers, I'm into that. It kind of falls in the beauty category. Beauty is seen also as kind of recession proof, but we'll see if we actually go into recession, what happens with beauty. But Elf Beauty, I think I talked about that one the last time I was here. And Elf is still insane. It's like 55 times earnings now. It's just way overbought in my opinion, but we'll see. They keep beating and raising. So what are you going to do?
Yeah, I'm looking right now at the Zacks #1's rankings, and you guys can always check that out, of course, Zacks.com. I see Marriott included here. So I don't see recession. I'm thinking #1 ranking on Marriott here. What are we seeing, Tracy?
The hotels are good. Travel is good. I don't know if any of you've done any recently, but all the planes are sold out. Heaven forbid your flight should be canceled somewhere. You might be stuck somewhere for a couple days even.
The cruises are good, Tracy. You got to go on one.
Yeah. I have a friend who just booked a cruise for 2024 for like April of 2024. Yeah, because it was already like 3/4 sold out, and she was concerned it would be sold out if she did not book it right now. So yeah, like any travel is still huge with the consumer. That's another sign we're not in a recession. The Marriott CEO was on CNBC after their earnings, and he was talking about, a lot of their urban hotels are doing much better. And, that's helpful because the resorts did well during the pandemic because we all wanted to escape the cities. But now urban travel is coming back, both with like business people, but also with leisure. People are going back to the cities. So a lot of these hotel chains, have big footprints in the major cities globally.
All right. And as close as we're getting closer to 9 a.m., I think that everybody might need an energy drink. So I don't know if you've been seeing Monster's been making a big move. And I do see CELH Celsius here on the #1 ranking. So tell us a little bit about what they're seeing in the energy drinks.
Well, it's a similar thing that we've seen with like Pepsi and the other consumer brands. The consumer is still spending on these kinds of items. And Monster, interestingly, people don't really lump it in with like the big tech companies. Usually in your mind, you're not, but it is one of the best performing stocks of the last 30 years. It ranks in the top 10. And I think it went IPO in like 1995 or thereabouts. So almost 30 years for their IPO, but it has been a tremendous performer. And it kind of does get overlooked, but the consumer, with again all these consumer type companies like the Pepsis, even the like Hershey's, these types of stocks are where everybody's going in. Now most of them aren't that cheap, So that's my issue with them right now, because I am the value investor. But, people are still paying the premium for these brands. They're not trading down.
All right, we've been talking a little old rosy here, and possible scenarios here. Obviously we have the banking situation, which is bad one day and good the next day here. Any pitfalls in the market here? We have some inflation data coming up later in this week. We're bumping up against resistance here. If there's something that keeps you awake at night, or like, man, for a negative turn in the market, what would that be, Tracey?
Well, I've been saying for months that I believe it's going to be the debt ceiling. It's coming up faster than I thought. I thought it would be July or August, but apparently it's now June. And I don't know about all of you, but I did live through and remember 2011 and what happened during that negotiation. And so did, President Biden. He lived through it too, because he was their chief negotiator. So that throws kind of a wrench in things too. And we know the market was down double digits during that negotiation. So I do have some cash on the sidelines, and I'm waiting to get better deals on some stocks if we see another sell-off here as it gets closer, as that deadline gets closer, because that's what happened last time. Now, we did see in 2011, because it was an outside event that caused the stock market to come down, not what was going on at the individual companies. And tons of insiders, the most I've ever seen, dove in that August of 2011 to buy stocks once the debt ceiling thing was done. And so it could be a big buying opportunity from the insiders again if we do get like a double-digit pullback, which is possible. It has happened.
Tracey Ryniec, senior equity strategist over there at Zacks Investments Research, a Michigan fan, and this recruiting class. I mean, you going into football with some high expectations, Tracey.
We are.
I expect to see you in Ann Arbor this year in the big house. Okay, thanks for coming on. Great information, and we'll talk to you again soon.
Okay, see you guys.
All right, little bit of a seesaw market here this morning. We're still maintaining our gains of 6 handles at 56 1/4. I alluded to Friday's high at 63 1/4, Wednesday's high at 67 1/4. So after that 4-day losing streak, Monday through Thursday, the Bulls fought back on Friday. Really important level to clear. As we've seen, it's been a choppy, market, but man, we're in a range here, and the Bulls got some heavy lifting to do.
Well, I don't think so, though. I think when you look under, the main reason we are not up much here today on the S&Ps is all the Apple, Microsoft, Meta, Google, Amazon, Netflix are all down. And that's just rotation. The banks go up. You've got to understand the rotation in this market. If you're day trading, long-term investing, it maybe doesn't matter. But if you're day trading, or if you're doing any short-term trading, it is all rotation right now, every single time. Like, why was Microsoft relentlessly bid? Because the regional banks were weak and they were looking for a hiding place. Well, the regional banks are starting to pick it up the last couple of days. And you know what? Microsoft has a pretty good day on Friday, but does it follow through here? I don't know. You got to be careful here, because just because the market and the regional banks turn around doesn't mean Microsoft is necessarily a buy in the short term, because, you can see this morning it's down. So just respect those relationships. They're dumb. They are dumb, but they're out there right now. So right now you've got big mega cap tech versus the world, really. So in the world, in IWM, going down, they were hiding out and all those things. IWM is starting to show a little bit of life here last couple of days, while this morning they're taking some money out of those bigger names. So just respect the rotation if you're a trader.
All right, team, let's go ahead. Let's get into our daily TradeZero time. All right, first one we're going to bring up, of course, is Zscaler, as they're trading higher after the company raises preliminary Q3 revenue guidance from $396 million and $398 million now to $415 million on the low end and $419 million on the high end. So you guys see Zscaler up here, and also, of course, affecting other cybersecurity stocks.
Are you
Let's take a
kidding
look.
me? Is what I'm just like up 20% because they raised revenue 6%.
There you go. That's
I mean,
exactly
this
what
is
I
just
was thinking.
shows you there's some stuff that's so beat up. When it says any piece of good news, they buy hand over fist. And Zscaler has been the dog of all dogs. It's been straight down for 2 years, has not participated in any of the recent rally. And it just says a hint of good news. They're like, whoa, we forgot about this one. So, I mean, I'm not saying you come in here and you short it because it's so beat up, but just showing you expectations for some of these companies are absolutely in the gutter. And they raise our revenue just the slightest little bit. It's like,
Not
oh
that
my
big is
goodness.
exactly what I was thinking.
352 a year and a half ago, $89. I mean, this stock has not participated in any type of a rally that we've had. So, I mean, now all of a sudden it's like it's back and, and you're seeing it. But again, bag holder central everywhere here. So I'm not chasing any stock up 20%. This is a revenue raise, but it's not even a big one. Wow. Just, shocking that they're buying it up that much. But again, just shows how beat up it was, I guess.
$4 off that pre-market high at 111.62. I wish I had a daily level that coincided with that. I don't. So if you get through that 111.62, your next daily high comes in at 113.31. But man, when you get these big moves like this and then you back off, you really got to catch a bid early in a strong bid. Right now, there's mild intraday support at 106. But man, exactly when Mitch was reading those numbers, and I'm like, come on. I mean, is that, do you add that much in market cap for that kind of news? Well, that's what they're doing.
We'll see what happens there. And of course, just to point to it, you see Snow up big on this. You see PACW showing up on the scanner. You see CrowdStrike showing up on the scanner. So definitely they're getting a little bit of some push off that backing. We can keep going through some other names here. There's ALB showing up. What do you think about this one, Dennis?
Well, you know what I think about it? I think it's ridiculously undervalued. But again, it's ridiculously out of favor too. And they say good stuff and they have a good report and people ignore it. They just don't care. This thing's trading like 9 times earnings. Again, it's cyclical, so you have to remember that. But the earnings they reported was just fantastic. $10.32 versus a 703 estimate. This company is just a printing press right now. And again, you think like, again, you got to know the revenue, the sales were, so the quarter was excellent, but the sales guidance wasn't great. So, is it, in the best world it can be right now? Maybe lithium's going to start to slow, but I still think lithium is going to be a big part of the future. As much as, I believe in AI, I also believe in EV as well. And lithium's going to be there. Albemarle, one of the biggest producers in the world of lithium. I'm long. I'm wrong. I've been wrong. I think I eventually will be right on this, though. So it's in the long-term portfolio, not looking at it. I think eventually I'm going to be right on this. I think it's going to take some time, though.
Not a lot of cues. I mean, traded 12,000 shares, trading near the highs of the pre-market session. 186.60 is your pre-market high. This one looks a little different to me. As far as if I was going to chase one, it would probably be this one as opposed to the Zscaler. Next potential target on the upside would be 188.56. And the other thing about this one, if you don't like gaps and everything, and you think this is a good move, you had a pair of highs at 185 the last 2 sessions. So if you come back to there, potential support. Unfortunately, the close is way down at 179.70.
Looks like, where was it? It was just there, but it looks like it disappeared on me now. I was going to talk about Chipotle because it looked like the burritos were strong there, but I don't know, man. It just seems like that stock doesn't want to go away.
Never goes away.
Yeah, never. I would never fight this. This is one of those I just don't fight. Yeah,
There's NVIDIA, CMG. They're just in a level of their own. Investors want to own them forever. They give them 2 or 3 times the multiple of other stocks. I mean, what's CMG trading? 50 times earnings, 55 times earnings. Again, fantastic company. I've never been able to wrap my head around the valuation, but I missed the whole thing because of that. So sometimes I guess you just got to ignore it.
Yeah, that's the hard part right there, right? Now, would you be taking shots in a WAL?
None of these.
None of these, right?
None of these.
If
anything, I'd play them from the short side, but you're not supposed to. I don't like you saying anything about shorting the banks. They're talking about, White House rumors talking about getting rid of short selling on banks. I mean, again, I think it makes it more efficient. This is a big pop for WAL. I mean, is it imminent? But it's come all the way back up to where you have all this memory, 35 to 40.
Yeah.
If you were so lucky, and that all it is luck, to buy this at 11 or 12 or 15 or 18, and it's just tripled in 2 days, I think you're taking the money and running. So yeah, I would be out of WAL. I would be selling it. That's just my opinion. I may be wrong. Maybe all these banks are eventually going to be back to all-time highs, and I hope that's the case. And you know what? If this subsides, the regional banks, if there's no more bank runs, no more bank failures, 5 years from now, these stocks may be back there, but they're not coming back here tomorrow. And I think if you're thinking 31 to 60 to 80 in this year, I don't think so. I think you're going to run into trouble here soon on WAL and PACW because you're just getting back up to where we just fell from. So you're getting all those losses back. So the people who are in these stocks at 40, at 38, at 37, and they just watched go to 11 in 3 days, like, oh my goodness. And they are thanking everyone right now that this stock has come back and given me my money back. So I mean, at 35 to 40, Joel, there is so many people who are underwater. Everybody who bought for the last 2 months got hammered 2 days ago. They're getting all their money back. Yeah. I'd be selling it.
33.30s. This one looks a little stronger as far as like a bid out there. You're just you stuck over 32, but keep your eye on the pre-market high. And if you're looking for another target on that one, I don't know about that 35 to 40 area today, but your 3-day highs at 33.30. That definitely is a potential target on the upside.
All right, team. I do want to take a quick look at the net change down. And with this one, I'll just mention at the top here, I have MSTR. You guys are seeing some Bitcoin stocks down, coin also down big here. And it seems like there's some battle going on in cryptocurrency. There was over the weekend kind of issues that were going on with Binance. They halted Bitcoin withdrawals for several hours on Monday, citing heavy volumes and surge in processing fees before clearing them at a higher cost. So just be careful out there, team. We could see maybe some continued downside. It wasn't that big of a hit in Bitcoin overall. I think I saw it down about like 1%, a little bit more than that maybe. But
now
we'll see. We'll see if this continues to leak, and will it start to show up in maybe tech stocks? We know how this has been correlated, but we'll have to wait and find out.
Bitcoin has had this huge lift because of the regional banking crisis. I don't know if the regional banking crisis is over. Nobody knows if it's over or not. It's impossible to tell, but they've bounced. And don't kid yourself. The sell for Bitcoin was Friday because it was bouncing with the regional banks, which made 0 sense. I mean, the Bitcoin has been up because of the regional banks. That is why Bitcoin has rallied. It, again, a little bit, early 2023 wasn't the case. But this rally from March, mid-March up to, this rally of the last $5,000 worth of Bitcoin or $7,000 worth of Bitcoin is all because of the regional banks. People fleeing out of there and saying, oh my goodness, the crypto people might be right, I better buy Bitcoin. And now if the regional banks stabilize, that is not good news for Bitcoin here. Again, we don't know. If the regional banks start to get into trouble here again, which might happen, Bitcoin will start to catch a bid. So just keep an eye on that inverse relationship between Bitcoin and the regional banks. This Binance is obviously knocking it down here today. 16, if you're looking at trading the BITO, 16 is a huge level. It's there right now. It's a huge level. It's got us hold that. If it gives that, then you start thinking about 14 again. But I think the regional banks are going to dictate the next move for Bitcoin here again, unless this Binance headlines start to get worse, or, there's always the risk, if there's some individual headlines to Bitcoin like the Binance. But overall, there's a lot of people hiding in Bitcoin right now that were scared of the regional banks. I was, one of them, not necessarily hiding it, but, talking, and trading Bitcoin off of the regional banks, and it's been working well. I do think there's an inverse relationship there you have to respect.
Okay. All right. I'm going to hop out of here, guys. Everyone have a good trading day. And let's see if we could take out those pair of highs from Wednesday and Friday in the S&P. So back with you later on.
All right. Joel's getting out of here. You guys can keep up with him, of course. PreMarket Prep Plus. Definitely give the nice little follow there. And we're wrapping up the day here. Like always, you guys can check out the extensive short inventory from TradeZero. We just showed you guys Zero Pro. Threw up the link there. So definitely check it out. Any last comments from Dennis Dick here?
Keep an eye on WAL, PACW. Keep an eye on those stocks here today. You want them if you're like, in this rah-rah IWM, we're turning it around. You need those stocks to hold the gains. I'm scared that those stocks could turn. If those stocks turn, everything changes here again. I do think there's people lurking on the Microsofts and the Apples and the Metas. So they're dipping here this morning because we're getting some bank rallies there. Those dips are probably going to get bought because that is just what has been happening here. So, could they dip a little bit more? They've run a little bit far, but he got Microsoft back, to where it was a couple of days ago, 304, 305. If that was to happen, I think people are coming here and buy the dips on those again. So buying the dip on quality.
All right, that's going to do it for us today. Like always, smash the like, keep up with everything Triple D Trader does. Have a good one, my friend. Straight out of the trading room. That's what his shirt sort of said. But all right, we're going to get you guys over to, of course, live trading that's coming up next as we continue with our small account challenge. Yes, Ryan and I made step forward. Ryan is beating me right now, so I got to see if I can play a little catch up this week. But it's all about the base hits, right? The base hits add up to it. And so if you guys want to come over and check out our small account challenge, of course, we've been working with Mumu, a new broker, but enjoying the analytics from it. So if you guys haven't checked it out, come over to live trading. And I do want to let you guys know we did get back to the book club. We had a great meeting this weekend. Of course, these are always Sunday nights. So if you guys want to join the book club, you guys can still do so. We do it every Sunday, 6 p.m. Eastern, and we got over 500 members, yes, signed up for the book club. So if you guys want to join the book club, this was my big initiative that we started in just this year. 5 months down the line, we got 500 members, hoping to grow this to 1,000 members before the end of the year. So you guys out there, smash the like, sign up, and hit the form that you guys will see right now. I'm throwing it up there. It was a great refresh. We touched some patterns. I even brought some major names, AMD, Microsoft, Apple. What are the patterns that we see on even those charts? So we'll see you guys always on the book club. And up next on live trading, I want to see if we get some new faces. So I'll see you guys over there. Smash the like and let's keep it going, team.